trading is execution. The act of trading is executing trades. And if you're going to execute trades, you're going to have to be able to do them without errors.
Hi guys, Happy New Year to you in advance. We have 20 minutes left into the new year, and I would love to spend my last 2022 moments with you guys. And there's this gem I have that I would want to share with you guys, and I want us to take advantage of this together. This is my new year present to all of you watching this video. So before we kickstart, I want you to know that any material or information within this channel is solely for the purpose of entertainment and education. So do not hold or do not see this channel as financial advice or investment advice. So however, if you want to trade alongside with me, I want you to not invest money you cannot afford to lose. So let's hop into the analysis ASAP. I'll be analyzing gold for us today, so let's see how we could take advantage of this coming into the new year. Before we kickstart, let's look at gold fundamentally. So the outlook for 2023 is for gold, we're expecting it to have quite an active year in 2023 because as a hedge against uncertainty, gold is expected to have quite an active year in this coming year 2023, and there are many risk events already on the calendar for the next 12 months. And then we have to consider the unforeseeable events that could shake up markets. So there's also a series of expected changes in both monetary and fiscal policy that could change the direction of the price in gold. So for the moment, gold is getting support from two main sources: the weaker dollar as the Fed slows down the pace of its interest rate hikes, and central banks around the world are buying up gold going into the end of the year. The reason for the latter are harder to pass because central banks are notoriously tight-lipped about why they are investing in safe havens. So one of the more common explanations is the assessment that gold is undervalued in the current market and would likely appreciate at least in the coming months, as you can see here in the chart. So further support from the Fed, are we likely to get further support from the Fed? Okay, one of the main selling points of gold is that it doesn't suffer from inflation. That is one thing you need to know. So given the skyrocketing CPI last year, how come gold didn't spike? That is mostly due to the rise in interest rates that made the dollar more attractive and the expectation that inflation would be reduced substantially in the short term. Man, can you hear the rockets being blown outside? It's almost time, man. Everyone is getting ready for the new year. So but for now that the Fed is expected to at most level off in rates, if not call them sometime next year, the dollar has been getting weaker the last couple of months. So the last 3 months in this year has been bearish for the dollar. So unless there is a major change in outlook from the Fed over the next couple of meetings, that trend is expected to continue. So which will actually further support gold. So what about China? What is China actually doing on these assets? So as we know, China is the largest buyer of gold, and this is another important factor. Lockdowns in China have halt economic development, but now lifting the lockdown is causing economic issues as many workers are absent due to illness. The theory is that Chinese people have low immunity to COVID because of the low rate of vaccinations and lack of exposure to the disease. But the wave of cases is expected to subside at some point through the winter, and then the Chinese economy might rebound, bringing with it renewed demand for gold. But there is another problem. The majority of economists are forecasting a global recession in the first half of next year. So the first 6 months of next year, so many economists are forecasting a global recession, and this could imply a slower rebound for the Chinese economy and less disposable income to buy gold. And additionally, the traditional view among financial managers is to hold cash through an economic downturn to be ready to snap up bargains. And if the Fed shows little sign of reducing rates, the dollar could get a second wind during the early part of next year. And getting through March, several issues are expected to be resolved by the end of March. And one is Europe will be through the worst of the winter weather. The geostrategic situation in Ukraine will enter a new phase. The ECB, which is the European Central Bank, will update on further bond sales, and the US economy will show sign of whether it fell into recession in the first quarter. Therefore, March could be an inflection point for risk perception. So gold could see substantial volatility depending on expectations of if or when there is a recession. So how deep it gets and whether central banks will ease up on policy sooner than expected. So on our charts, we can see that this year closed as a big bear engulfing candle. As a big doji candlestick. I'm actually excited about the new year, so I need to calm down and analyze this thing carefully. So the year closed as a doji, and you can see that over the years gold has been bullish. So switching to the 6 months time frame, before we do that, let me mark out this demand zone that is below current market price. So these are demand zone, and switching to the 6 months time frame, you can see the last 6 months in this year, the last half of this year closed as a hammer. And it is not a very good hammer, but it's a hammer. And if we go down to the 3 months, you're expecting to see probably a bullish engulfing or something. Yeah, so this is a bullish engulfing pattern, which is indicating an upward movement of price. So we could get a move that will close above this size. So for this year 2022, expecting a break of this high, in 2022 for gold. So fine-tuning to the monthly time frame, when the market opens tomorrow, we're going to have a new monthly time frame, and this will further make gold rally to the upside, breaking this high. So let's go to the daily time frame and see where we could take this trade. So this is a very good zone. So this is a good zone to trade, targeting this high. So voila. And if I switch to this is my anticipation on gold. So let's see how, when price gets into this. So we look for a buy back into the highs. So happy new year, guys. Stay safe. Peace.